knowledge, experience, and engagement on these issues. I know at least a few of you have been thinking about this and writing on this or engaging on this from your perches in private sector, in the banking sector, in the infrastructure sector, et cetera. So I hope we can have a very dynamic conversation here today to think about these weighty issues of Indo-Pacific connectivity. First of all, I want to just apologize on behalf of Dr. Rajiv Lal from IFDC Bank. He was unable to join us today. He very much wanted to be here, but he was feeling a bit unwell, and so wasn't able to travel to Delhi for the conversation. But we are quite fortunate to have some very interesting perspectives to bring to the table, to bring to the conversation today. At this luncheon, and let me just introduce our panelists. We have to my far right James Carafano, who's the vice president of the Heritage Foundation, and has written quite a bit and thought quite a bit about how we look at the U.S.-India relationship across the Indo-Pacific, and certainly one critical aspect of that is on the connectivity issues. To my immediate right is the CEO of the National Infrastructure Investment Fund of India, Sujoy Bose, and I think we have heard those who were here last night for the conversation that you were part of quite a bit on the issues that you are tackling as you try to unlock the infrastructure potential in India and really attract in the private capital that can meet India's infrastructure needs. And I want to put that in the larger context today as we go through the discussion and conversation during lunch. To my immediate left is Sanjeev Sanyal, who is the Principal Economic Advisor to the Ministry of Finance, is a leading economic thinker, not just in India, but really across Asia, and I think is going to bring to the conversation, challenge us a little bit on how we think about the Indo-Pacific and opportunities here in Asia versus kind of global, and I look forward to hearing your thoughts on this. And then to the far left is James Crabtree, whom many of you will know from his very impressive stint with the Financial Times. And I think you were based in India for some time, or
for 5 years.
For 5 years. He's taking a short break from the Financial Times. He's now based in Singapore, where he's been at the Lee Kuan Yew School at the Center for Asia and Globalization, focusing on some of these issues of the Indo-Pacific from the perspective of the ASEAN and Southeast Asia. And so I think it'll be very interesting to bring in those perspectives as well. Maybe what I'll do is just frame the conversation for 2 minutes and then engage our panel on this. You know, Indo-Pacific connectivity is a bit of a catchphrase and a buzz phrase these days, and there's certainly a lot of discussion around this, and it's, I think, important to kind of look at the why of it. Asian Development Bank a few years ago did a study, which was Asia 2050. And in that, they talk about the fact that Asian economies by the year 2050 would likely comprise 50% of global GDP. If you think about the fact that Asia has not comprised 50% of global GDP since probably around the 1700s, when we were talking about the old Silk Route trading routes that brought goods from Asia into Europe and vice versa. And that for much of the 20th century, Asia was hitting at about 20% or lower of global GDP. But the ADB has also, I think, in recent weeks come out with the critical gap in infrastructure finance, $26 billion gap by 2030 for Asian economies to be able to meet their growth potential and projections. And that gap in infrastructure is really the critical need of the hour that I think has seized so many around the region. Now, you've seen China as the very active and aggressive entrant into filling that critical gap with the Belt and Road Initiative, with AIIB, and other initiatives. I think China has put on the table, or at least pledged, up to $1 trillion of investment in infrastructure across this region. And so the question then becomes, what are the implications of that? What are the economic implications, the strategic implications, and what are the options and alternatives as we think about the need for us to leverage and do more? You've seen a priority placed on this issue from the United States, from India, from Japan, and many other countries across Asia on how we can bring more in. During my time in government, we talked quite a bit about the Indo-Pacific Economic Corridor, about the New Silk Road, but the challenge was always on leveraging the private investment to really take those initiatives and make them rise up and meaningful. And so our discussion today is really to talk about, in that frame, with the strategic importance that has been placed on connectivity. How do you take that strategic priority and make it an economic reality? And I think there's a dawning realization, though perhaps one could say that we're late to the game in understanding that the geopolitics of Asia are largely impacted, influenced, and driven by the geoeconomics rather than the other way around. So as we think about that, let's tease out the conversation and maybe get a little bit more granular. And what I thought I would do is maybe, James, turn to you first to talk a little bit about how you're thinking about connectivity, what you see as the focus in the current administration. What are some of the tools that are being looked at in ways to try to unleash more focus, more investment to advance connectivity projects?
Sure. First of all, to this administration, the term Indo-Pacific is anything but a bumper sticker. It's actually foundational, and foundational in two ways. So if you look at the United States, if you kind of parse the national security strategy, and what you clearly see is that the United States recognizes that in order to remain as a global power with global interests, it really has to have peace and stability in three parts of the world that are really vitally important: Europe, the Middle East, and Asia. So first, Indo-Pacific is important because it delivers a concept of Asia which is more in line with where the United States has to have engagement and influence in order to remain as an Asian power. But secondly, and probably not as much as discussed, is the Indo-Pacific actually links all those three regions together. And so the United States recognizes that that's a linchpin in that. And so from that perspective, it's really important. So this administration has, in addition to the national security strategy, developing an Indo-Pacific strategy that's, I think, pretty far along. I'm not sure if it's going to be classified or unclassified, but I feel like a bit of a detective trying to deduce what's actually in it. But I do get a sense that there's a very strong component on private-public partnership and private sector engagement in the Indo-Pacific region. A lot of that is directly as a response to how the United States is thinking about responding to the Belt and Road. I think America's kind of come very late to the game in terms of kind of conceptualizing where the Belt and Road fits in terms of meeting our strategic influence. I think we've been very heavily influenced by Japanese and Indian views, which have really kind of shaped our thinking about it. And I think we're kind of coming down to the same place, which is, there are places where we actually might cooperate with the Chinese, but there are other places where our interests, don't align. And we're not necessarily going to be concerned about every single node on the Belt and Road, but there are places where the United States wants to see partners, be successful, and that there are alternatives, and I think the United States actually does view it as a free and open Indo-Pacific, not as a containment strategy of China. So I think there'll be a heavy pillar in that strategy for private sector investment. So just a couple of ideas on how the United States, from the government perspective, might try to do that. And again, I'm not a representative of the government, so I don't know if this is true, but I think it's true. Erin Walsh, who is on the presidential transition team in the State Department and was in the White House, she's gone over to Commerce. She's in charge of the commercial section there, and that is an area that they look to revitalize. And so I think that's in terms of driving the commercial attachés to be both more strategically focused on where we need to be focusing on economic activity and shifting the metrics on what they're actually doing and delivering, both in the offices overseas and in the United States. I think that's something where we'll see a lot of change, and where they're definitely try to align the strategic priorities with where we want to invest. OPIC, being at the Heritage Foundation, of course, you always want to get rid of OPIC because we don't believe government should be, doing anything. But apparently they're not going to do that anytime soon. But so there is a lot of interest in the U.S. government in what you do with OPIC, and a much greater intent to make it a strategic instrument as opposed to just kind of a general instrument of economic development. And so aligning OPIC's attention on areas which of greater strategic interest in the United States is clearly, that's coming, and clearly one of those is going to be the Indo-Pacific. The other thing that they're trying to do is better parse between what State Department's doing, what OPIC is doing, and what USAID do to try to synchronize those efforts more. So I expect more of that, and I expect a lot of that to unfold in the next year. I mean, this is a administration that really is, in a sense, open for business. I mean, from the president on down, there really is, you always hear this about, well, we're out there helping the private sector, but these guys really, really want to do that. And the president's really driving in that direction, and in a much more, I think, muscular and forceful way than we've seen in recent years. And I think we'll start to see that trickle down in the near future. How's that?
Great, thank you so much, James. And why don't I now turn to Sanjeev, and maybe you can talk to us a little bit about how you look at the Indo-Pacific versus other frames of where connectivity has been in the past. And I think I might need to turn mine off for yours to turn on, so I will turn it to Sanjeev.
There we go. Thank you so much. Thank you very much. Yes, building, of course, there is many aspects to building the interconnectivity infrastructure. And yesterday we had a session on infrastructure talking about the financing of it, the various problems of ease of doing business, enforcement of contracts, and so on. I'm not going to repeat all of that. And I think the more interesting thing, just to get this conversation going, would be to look at the infrastructure of the mind, in the sense that India's view of itself and its place in the world has undergone a fundamental change in the last few years. Now, some of that is merely, a more confident country as its economy has grown, so it's partly that. Part of it may be the replacement in the last few years of the old elite, which had a certain worldview inherited from a somewhat anglicized, westernized construct. So as that has got replaced, as they get replaced too, you now have a new group of people who have a much more fluid worldview and a much more longer-term worldview than has been the case. So as a result of that, you can clearly see a new sort of mental map of the world coming about, in which India's place in the Indian Ocean is very, very important. There are many reasons for that. One obvious reason for that is our geographical location, but despite, of course, that geographical location has not changed. What has changed is our worldview of it. And of course, this should not be surprising if you look at the long history of India. India's neighbors are not just Pakistan and China, as it appears sitting in Delhi, but if you take a maritime worldview, it is Oman, it's Indonesia, it's Singapore, it's South Africa. These are countries with very strong, thousands of years, in fact, of links to India. And so a rewiring of our mental map to a much more Indian Ocean construct in the context, of course, of our longer civilizational history, that is an important part of what has changed. Secondly, as sort of an extension of it, a look east approach to the world as opposed to the much more North Atlantic worldview that the first three generations who ran India tended to have. Of course, the look east policy and then the act east policy has been in place for a little while. But what has happened in the last couple of years is a much more stronger sort of emphasis on it. You can, of course, see that very clearly with our strong alliance with Japan. But you will now see that becoming stronger with time with the Southeast Asian countries. In fact, it is not by chance that you will have 10 of the heads of government coming for a Republic Day parade in just 10 days' time, on 26th of January. So there is a very much a concerted and clear-sighted change in orientation and thinking on this. Now, how does this all fit it through to the Indo-Pacific? Obviously, there are geostrategic issues here as well, but there is also comes from a different view that there is purely economic reasons to have a link through to there, and of course a worldview of even America not as an Atlantic country but as a Pacific country. I mean, this is true at multiple levels. Whether our link is to the Silicon Valley, the very large Indian community which now lives on the West Coast, the industries in which we both collaborate and compete in, which are very often software related. So the Indo-Pacific is something that is a very important part of the new emerging construct, which, as I said, is already coming together in various bits, from an Indian Ocean perspective, from a look east policy. But I think this is a very important thing because building the actual infrastructure is almost trivial. It is this mental map in many ways that drives many of these things. And that has got, I can say that as somebody who participates in much of the discussions and debates within the government, that has been fundamentally reordered. With that, I'm going to stop.
Well, great. Thank you, Sanjeev. And I think, challenging us to think about the infrastructure of the mind and the mental map that brings into more sharp focus the opportunities of connectivity across the Indo-Pacific. Would love to tease that out a little bit when we get into the Q&A portion. Let me now turn to Sujoy Bose, who has the task in government of really creating the opportunity to try to bring in and leverage the private capital that can create the infrastructure that India has identified as its critical needs as you move forward. And I know this is something that you've been working on and putting a lot of thought into as well, so we'd love to hear your thoughts.
Thanks, Nisha. But let me just start by basically at the point that the impact of the political relationships and the impact of the imperatives, the economic imperatives in countries outside India have such an influence on, at the end of the day, how investment flows will come into India is something that I actually have observed extremely at close hand over the last year. And I want to go back to our panel of yesterday, where we had a representative from a Canadian pension fund who basically said that their returns over the last, so their target returns are around 550 basis points. In the last 20 years, their returns have been in the range of around 6%, which is a little bit better than their target returns. Their projections, and this is with a weightage of about 70% of developed market assets. Their projections with that same weightage for the next 10 years is about 3.5%. So there has been a 250 basis point drop in the returns of pension managers who actually owe pensions to citizens in countries where they are starting to realize that they're going to have a major problem if they don't change the way they operate. And also what's happening is that some of what Sanjeev referred to, which is the political closeness of various countries, actually have an impact on the way people in those countries also assess risk in terms of their investment strategies and economic sort of aspects of their, of countries in their region and their sort of friends. And this has had a very interesting impact in the way that NIIF is also evolving and the way that we are able to have discussions with potential investors into the country. So NIIF is a fund manager with a 49% stake of the Indian government and a 51% stake of commercial investors from India and abroad. So as of now, we have a fairly large pool of capital, about $4 billion. And the idea is to invest this into the infrastructure sector in India. The way we've gone about, so we have been at this for about a year, and we're actually quite pleased that we've already had a first close of our fund. We have substantial capital to invest, and we are about, we are about to sign our first investment in the next few days. When we started trying to figure out how to go about NIIF, we basically put ourselves in the shoes. We started, by putting ourselves in the shoes of international investors into the country. Now, the way that international investors approach a new country, let's say, is first they look at the macro. If they look at the macro and they see there's stable macro, there's stable politics, and there's basically potential for growth, which is either just through demographics or through ongoing reform, they start taking that country seriously. And the first move that they make is really into public markets. So it's basically listed equity and in some cases bonds. However, the move from the listed market to the private market, which is where infrastructure really looks for capital, takes time. And to make that move, of course, first of all, in India, what we are doing is we're also creating listed instruments that can allow people to invest into the infrastructure sector. So we've created an instrument called the Infrastructure Investment Trust, which now is starting to get quite a bit of notice among large investors from abroad. But the real, the real challenge is for those investors to actually move into the private infrastructure market and to allocate capital to that market. And the first reaction that many of them have, because they don't have the same liquidity that they get in the public markets, is about it's too risky. But when you really cut through what the issues are, any market outside your home market will be considered to be risky. It's really how you manage those risks. And also what people want to see is they want to have the ability of, when they spend the time to assess those risks and that market, of the ability to make multiple investments on the back of their first one. So what we are trying to do is we are actually trying to create a platform where we have partnership with the government, which provides comfort to many of these investors, but at the same time, we are operating as commercial investors at arm's length from the government. Second, we operate at scale. So the whole idea is, in order to make a difference in the infrastructure sector in India, companies need to invest in scale. And one of the things we have is capital, and that's what we are working at. And to do that, you also need to create counterparties that the international investors can actually get comfort that their interests are aligned with the interests of the investors, and also counterparties who understand what's happening in the local market. So we are basically creating a platform that allows for that. And having done that, we believe that there's going to be substantial investment coming into India, because if you really think about how the markets have moved, once the Delhi Metro, I mean, for those of you who have at all, by the way, I strongly recommend taking the metro to the airport. You'll be impressed. It's like the Heathrow Express, and it's much faster than driving to the airport. Once the current development phase of the Delhi Metro is going to be completed, it's going to be the 4th largest metro in the world. And that's after, and you know, if you were to guess what the three others are, you may actually have missed them, because they are London, Beijing, and Shanghai. So it's no longer New York that features in the top 4 metros, you know, metro systems of the world. Boeing's largest customers are China and are in China and India. And I could go on, Siemens, and I could go on. And hence, I see once you have a situation where there is familiarity from a political standpoint, there is economics and markets that the companies from a certain country are seeking, investment follows. And so we believe that over the next few decades, a bulk of investment is going to move into infrastructure investing in India, and we hope that NIF will play a role in helping channel that investment into the sector.
Thank you, Sujoy. I think there's a lot there that we want to try to tease out, but before we delve into that, I want to turn to James, because James, you've been looking at this issue from the perspective of the ASEAN countries and looking at connectivity from that perspective. You've also looked at some of the infrastructure connectivity in Sri Lanka, and how we're looking at the investments that are coming in there, the opportunities that have been catalyzed, and the ones that have been missed. And maybe you can share some of those thoughts with us.
Very good. Thank you very much. So let me just say 3 brief things. So I used to live in Mumbai. I now live in Singapore. And so, as Nisha said, my perspective on this is sort of conditioned by how this looks from ASEAN. ASEAN as a sort of block often gets a bit lost in this discussion. I mean, I think Sanjeev is right that not simply in ideological terms, but geopolitical terms, there's been this recasting of Asia to make it a bigger, broader region, and that has been useful in all sorts of respects. But that does miss out on the fact that actually for much of what we're talking about here, ASEAN is the game in town. This is where most of this money is going into. It's where many of the projects are happening. The newer move, for instance, the Asia-Africa Growth Corridor, the Indo-Japanese project is rather sort of, it's under development, as James said. We're not quite sure what this amounts to yet, but the ASEAN projects are there and they're happening. And so let me say 3 things about how this looks from ASEAN. I mean, the first is that clearly people are very nervous about what's happening in the US. You need to start from that in a sense, part of the reason why people are enthusiastic about BRI is that, it's the only game in town. There are projects to be had, there's money to be offered. Some ASEAN nations, particularly the poorer ones, have been more enthusiastic about taking it. But in general, given that the US isn't really doing very much in this space, there's a vacuum that China is moving smartly to fill. And if you're sitting there in Thailand or Malaysia or in Indonesia, you need money to build infrastructure, then this is quite welcome. However, there's also nervousness about China as well, and in a sense that's the second point. There's partly a nervousness about being left out. You saw this in Singapore. So the Singaporean Prime Minister was pointedly not invited to the big BRI jamboree in Beijing at the end of last year, presumably because of the way that Singapore had reacted after the Hague ruling on the South China Sea, although this was never articulated. This was not just, obviously noticed in Singapore, where the Singaporeans made lots of subsequent entreaties to get back in the good books of the Chinese, but everybody else, in a sense, they were put on notice that if you didn't play along with what the Chinese were doing, then you'd get cut out of the goodies. But the same is true, as Nisha said, I used to cover Sri Lanka, and so have spent time digging around Hambantota and some of the other Chinese projects and looked at from ASEAN. People are not blind to the risks of taking Chinese money, not so much the money that is meant to be coming out of AIIB, which at the moment isn't actually giving any money because they're trying to out-standard the World Bank and doing everything by the book, and that means they're moving very slowly. But in the sort of faster and looser money that comes out of the bilateral projects, it's not as if people are ignorant of the risks of this. And so that's the second point, that there is a desire for balance. there is a desire around the region in all but the countries like Cambodia that have really thrown their lot in with the Chinese for there to be different options on the table, and that's sensible. You know, you want more money rather than less, more projects rather than less, and so if there was a way in which the other powers could come together and articulate a vision that actually had some money behind it, then I think that would be welcome. And it sort of strikes me that, you know, you can see that this desire for balance, you see it manifesting itself in geostrategic terms in the reemergence of the Quad, and what you need is some sort of Quad equivalent for infrastructure. You need much more cooperation between the non-BRI nations, because clearly they can't do it all themselves. India and frankly the US is not going to provide the money, so the Japanese need to provide the money, but some other elements of these partnerships can come from, you know, the other non-China countries around the region. Equally, there are advantages which those countries have. In the session last night, we were talking about the fact that in India and also in many of the ASEAN nations, the type of infrastructure that people are looking to build over the next 10 or 20 years is going to be less and less to do with roads and rail and more to do with urban redevelopment, other areas, some even sort of industrial infrastructure, the rules that will govern artificial intelligence, which are up for grabs at the moment, that sort of thing. These are areas where the non-China countries have a much greater role to play. So it strikes me that while there is nervousness both about American absence and about the consequences of a greater Chinese role, there's a gap there if the sort of the other countries can come together and use the international financial institutions more effectively. So at the moment, Tharman Shanmugaratnam, the Deputy Prime Minister of Singapore, is leading an eminent person group in the run into the next G20, where he's also looking at how do you try and get more private sector capital into infrastructure with a view on this part of the world. Now, they're not looking at that in explicitly geostrategic terms, but nonetheless, there should be ways in which you could reimagine the role of the existing IFIs in a way that can bring more private capital into this picture. So I'll stop there.
Well, thank you. What I'll do is maybe kick us off with a question and then turn it over to the rest of the participants to take the conversation and ask questions and make comments. But what I guess where I'll pick up is where you left off, James, as you talk about the need for leveraging of private capital. And certainly, while you might get state capital from Japan and from a few other countries, the large capital to be leveraged is private capital. And what are some of the challenges, but also some of the opportunities to try to leverage through P3 initiatives, through ways to revolve credit? When I was working previously with the Albright Stonebridge Group, there was an initiative that was looking to create a fund that would buy up old EBRD debt that was mature debt, so that then the EBRD could reinvest the public funds into new projects and opportunities. Are there models like that working with IFIs? Are there models for co-financing by, I think, OPIC and JBIC announced an MOU during President Trump's visit to Japan to look at some co-financing of projects? Are there opportunities to try to leverage in more private capital through these creative mechanisms that allow for, whether it's infrastructure finance quad or a track 2 or track 1.5 industry, gathering that brings all of these different players to the table to look at creative opportunities? And I'd love to hear from our panel on that, but maybe I'll start with you, Sujoy.
And given that I spent 25 years at IFC, I suppose I can bring some color to that. So one of the things that I got very frustrated about when I was there was the fact that the multilaterals and the international financial institutions, I think, are focusing on the wrong thing, and particularly more recently. So a lot of the focus is basically on allocating capital, on basically investing capital. And a lot of the focus is also at a very high level in terms of creating instruments. So, for example, the Masala bond, which is, of course, a great, it's a very good instrument. But then the question always you have to ask is, when you do that, how much of that actually gets into infrastructure? And I think the piece that has been missing, which I think the multilaterals and the international financial institutions are good at, and they could play a fantastic role, but it needs more patience. And recently I think that patience has gone away, is really building institutions. So it's really the bit about fishing and fishing for someone, and then teaching them how to fish. I mean, that's the whole difference. And what I mean by this is, so I used to run infrastructure for IFC. And we had a fantastic portfolio in India. We had $2.5 billion invested in India in infrastructure. It's a very good portfolio. But the large investments that IFC has in India were only with 3 or 4 counterparties. So the problem that you always have as an international investor is finding enough counterparties that can absorb the large amounts of capital and actually allocate that capital in projects that meet the criteria. And some of the criteria that these multilaterals bring into these countries are good. I mean, environment standards and so on and so forth are required. But a lot of times, there are not enough counterparties with the same alignment of interests, with the same amount of capital that is required to actually, on an ongoing basis, replicate these projects and build them at scale. And I think that is a real gap. And the reason I've come to NIF is actually to try to address that gap and really build counterparties for international capital that ultimately can absorb that capital and channel it in a responsible manner with partnership from the government, which in infrastructure is critical, into actually building stuff. So this is where I think there is currently a gap. And again, James was mentioning AIIB. I think AIIB is also very much going into the mold right now of basically lending to either government entities or subnational entities. They've just started lending to the private sector, to investing in the private sector. But I think the institution building aspect is still not getting enough attention and definitely needs more.
James, did you want to weigh in on some of the creative tools, perhaps, that we can think about for bringing more private capital into play? And I want to just ask also if you think, entities like the Millennium Challenge Corporation, where this is the one place in the U.S. government that does do infrastructure finance, doing $500 million compacts with countries to do power sector, road, et cetera. Is there an opportunity to take that and leverage private capital into something like that?
I'm not so sure the MCC is going to be the best fit for that, because they don't necessarily target the strategic investments the way you would want. One of the things I'm really hopeful of is that the U.S. is going to align these different tools that they have and kind of, to get the right tool in the right place. The thing about America's been absent. I think that's true. I don't think that's going to continue. I think there is going to be this robustness in the U.S. engagement, and I do think that the private sector piece is going to be large. So the one thing I was struggling with was this notion of somehow this quad infrastructure idea. And as a strong proponent of the quad, we ran a quad at the Track 2 level for several years, trying to get the governments to come formally back to this. I think the quad actually is going to. I think it's going to be one of the most important diplomatic structures for how governance evolves in the Indo-Pacific over the long term. Having said that, I think the Quad's going to evolve relatively slowly, and I'm not so sure the private sector piece is going to be where the Quad would be best leveraged in the short term. I think that the real energy is going to come from the trilap between the U.S., India, and Japan, and I think there's a lot of potential growth there and interest and comparative interest from all three sides. But again, the problem is kind of the instruments don't align perfectly, And so, you know, the U.S. has got to do a better job of kind of inventorying its instruments and realigning them, and I think that's going to be a project that evolves pretty well over the next year or two. So,
Just a quick intervention to basically say that the U.S. Treasury has actually provided technical assistance to the NIIF, and they've actually got the Stanford's Global Project Center working with us on our governance aspect. So we, you know, it is a way that I think from a geopolitical standpoint, you can help develop institutions that can play a significant role in infrastructure, private infrastructure.
Well, let me open the conversation up, see if you guys want to comment on the last question. Otherwise, I also want to bring others in, but James.
Well, I mean, it's just a quick thing on the infrastructure quad idea. I mean, in a sense, seems to me the distinction between private capital and state capital is a sort of slightly risky one. There is, coming from the US side, there's this tendency to sort of say, well, we can't bring tons of state money, but maybe we can rebalance that by somehow bringing in lots of private sector money. And this seems to me problematic in two respects, one of which is they often depend upon each other, that private capital looks to some sort of state framework as a sort of mitigating factor. We saw that in the discussion last night, but also, you know, investors are worried about geopolitics. They want to know they've got some air cover. And so if you're trying to sort of think about how you want to get more private capital and actually having more robust structures for, and frankly more state money from the non-Japan kind of contributors is an important part of this. Otherwise it's a bit of a cop-out. And so, you know, it might be that you're looking, as you say, towards the US getting more substantially involved in things like the Asia-Africa Growth Corridor. It might be that over time you try and take an existing structure like the Quad and try and build other elements beneath it. I mean, none of this is going to happen quickly, but if you're looking for things out there that you might work with, then I think you need to do these two things together. And sort of the problem for the kind of non-China nations in this part of the world is that too often you talk about things like bringing in private capital, and then there's no geopolitical kind of dividend to that. So, I mean, I'm quite fond of the masala bond idea. Your colleague, Jingdong Hua at IFC, it's one of the few things I get credited for my time in Mumbai that I named the masala bond. I wrote the piece in the FT when the thing didn't have a name, and sort of went through the available foods and animals which could name this thing and said it should be called the masala bond. But in the end, the you know, clever instruments, sort of funding mechanisms, bringing in pension funds, you know, this is all fine, it's all helpful, but there's no geopolitical dividend to any of these things. So you need to bring the state and the private component together if you're going to sort of achieve your objectives of, one, boosting infrastructure in the region, but also providing a degree of geopolitical balance.
Yeah, I just want to sort of focus on a slightly different issue, which is what is all this private or public money? What infrastructure are we really talking about? I think you need to think a little bit about this, because I think this session at least is not about financing each other's domestic infrastructure. This is about the connectivity part of the infrastructure. And since that is what we are really here to discuss, it must ultimately be about supply chains. Physical supply chains of goods going back and forth, could be of supply chains of services, or whatever it is. But I think this is an important part of what we need to think about, because the framework infrastructure will in many ways be driven by this. Whether it is the enforcement of contracts, of course, and the things that happened that we discussed yesterday. But I think an important part of this, as I said, has got to be the mental map, because the East Asian sort of network, the dense supply chains that exist there, have a lot to do with the geopolitics of the 80s, 70s and 80s that then spilled over into the 90s. In some ways, therefore, the mental maps and the geopolitics, the geostrategic networks do matter. And so I think that is something to be said about this mental reorientation that we are all witnessing.
Yeah. So one thing that I think is going to come out of the Quad that's going to be very helpful is And one of the initiative will be on domain awareness, right? So we've got these maritime domain awareness centers that are kind of sprinkled throughout the region. And there is this kind of grander vision of linking all this together to kind of create a larger situational awareness picture. Coupled with that is a real interest in kind of building constabulary maritime capacity, particularly in coast guards. That's going to help provide a lot of safeguards and for, I think, for maritime infrastructure, right? So that actually I think will be quite helpful and kind of an accelerant, on the maritime component of that. And the other thing we see a lot is a lot of cooperation in the cyber realm between Australia, US, India, and China, and that's certainly going to help in terms of creating greater comfort in that space for infrastructure investment in the region. So, yeah. So I think those are kind of under-recognized accelerants in the opportunity for infrastructure strokes that we're going to see throughout the Indo-Pacific in the next few years. And those are coming on pretty quickly and are actually relatively short-term things, right? Because a lot of that stuff's already there. It just needs to be kind of linked together and synchronized. And there'll be a lot of capacity growth without actually, doing very much different other than just linking all those things together.
Let me turn to the rest of you and see, please introduce yourself and then ask your question, and we'll try to get around as many and just call on you.
Thank you very much. My name is Fyodor Wojtolowski. I'm from Institute of World Economy and International Relations of Russian Academy of Sciences. I have two questions. One question is for Dr. Sanyal. Taking into account the development of interdependence between China and the United States, which took more than 30 years, now we know that figures of trade turnover are receiving $600 billion, and with India, the United States are having less than $70 billion in trade turnover. The same figures are in the sphere of investments. Taking into account these figures and taking into account this interdependence, how much time do you think it would take for India to receive such figures with the United States? And do you see, drivers on both sides, the same that United States are having with China to receive such figures in trade turnover and in FDI? And I have second question, which is for Dr. Carifano. We are talking about Indo-Pacific connectivity and engagement of India into the Indo-Pacific connectivity. But for India, there is another dimension of development of its infrastructural projects and corridors. It's also north-south dimension. And, India is looking forward cooperation with Iran in this sphere, and already is working with Iran on developing railroads and logistical corridors. So taking into account this cooperation and its perspective, how do you think the United States would react to these, bilateral activities and efforts, taking into account that the U.S.-Iranian relations are becoming more and more complicated? Thank you. See, these kinds of things take a long periods of time. I mean, the number, there's no question that India's trade with the US is a fraction of what it is with that China has. That is, I'm not questioning. But what is the origins of all of this? The origins of it is Nixon, Kissinger in the 1970s. But the next 20 years, actually, nothing much happened. It's really in the 80s where there's this explosion of growth, which has led to that number that you just quoted. So India, thankfully, is not starting from where Nixon and Kissinger had to start. So we are already some part of the way there. But the point I'm making to you is, once these relationships settle into some sort of, there is potential for very dramatic expansions in trade, growth, and relationships. So Whether or not India will do this, certainly don't think in years. These are decade type time frames. But nonetheless, in those decade type time frames, it is conceivable that you will have this completely different relationship, maybe rivaling that which China and the US have today. Of course, remember that history does not repeat itself; it rhymes. So the exact mode in which it happens may be quite different. And this will happen, remember, in the context of massive technological change. The exact kind of industries which will trade back and forth may be different. The kinds of investments may be different. The geopolitical situation may turn out to be totally different from what we are imagining it today. There are many, many imponderables in here. But the fact of the matter is that these things need to be looked at, when you're creating the foundations of these relationships. You've got to take a much broader view of these things than, next quarter's GDP growth or next quarter's trade numbers.
Yeah, that's a great question. White sticker, there you go. What's that thing? I think I just launched the nuclear weapons, sorry. Well, see, if you're in Hawaii, you wouldn't think that was funny. So one of the cornerstones of, I think, the U.S. approach to the Indo-Pacific strategy is that the U.S. is not going to be asking countries to take sides. You're going to do business with us and be friends with us, and you're not going to do business with anybody else and be friends with everybody else. That doesn't make any sense. China's a good example. We do business with China. We're not going to stop doing business with China. We don't expect other people to stop doing business with China. So I don't think there's a presumption that, in a sense, India completely changed its relationship with Iran because it's strengthening strategic relationship with the United States. That's not on the table. How much support or interest the U.S. has in that, I think it's kind of up to the Iranians. I mean, if you actually look at the administration strategy or their attitude towards Iran, they are treating Iran as an adversarial power. I mean, this is a 180-degree shift from the last administration. The United States does not see the way forward with Iran through engagement. That Iran is an adversarial power that is a destabilizing force in the region, and that the destabilizing effects of Iranian foreign policy are not in U.S. vital interests, and we want it to stop. And but I think it's very, it's noteworthy the president didn't just pull out of the Iran deal, and instead, he's now pushing for a framework where they want additional conditions and guarantee to not just deal with the nuclear proliferation issue, to deal with the nuclear proliferation issue, and then that doesn't presuppose that the U.S. won't continue to kind of bump heads with Iran on other things. So, we'll have to see how the Iranian regime responds to that. I mean, look, we're never going to be best buds, but if we stop bumping into each other's vital national interest, then I think the U.S. concern with Iranian joint projects that actually make sense and are actually good for the region, and actually offer real alternatives. I'm not sure the United States would have a big problem in that, but we're a long way from, I think, hearing saying what that call is. So I wouldn't say never. I certainly would say not now. Yeah.
My question very general. This is former Indian Ambassador Surendra Kumar. I'm also founder of Indo-American Friends Association. My first question to you, Nisha, in your earlier incarnation within previous administration, you're talking about Asia pivot, Asia relevance. Now we are Indo-Pacific. Now this journey, in the eyes of many Indian commentators, is greater recognition, acknowledgement of India's position for the stability. Whether do you agree with this? My other question is, Mr. James, on your right. Now you start with initial remarks, you said US want peace in Middle East, Europe, and Asia. Now President Donald Trump, one single announcement of shifting the capital, embassy to Jerusalem, entire Middle East, including Saudi Arabia, where he went first time after becoming president. So many feather ruffle, then turmoil, and the vote in General Assembly shows how many countries were against you. As for Europe, his visit to UK is cancelled for reasons all known. The relations with German Chancellor are also not as close as they were earlier. In Asia, if you include North Korea and Afghanistan, certainly is part of that. This also, so I don't know whether the current president's best intentions of conducting his foreign policy through Twitter or whatever really helps stabilizing the region or create more disruptions? Thank you.
Well, I'll be very brief and then turn to James, and then we'll try to get as many additional questions in the short amount of time that we have left. I'll just say that I think that there's no question that there's a recognition in the United States and around the world of India's growing importance, economic and strategic importance. And so you're seeing far more prioritization of that relationship and ways in which to engage not just bilaterally, but regionally and globally. James?
I'll just be really quick so we can get back on topic. I disagree, okay? And I think I'll just look at the Indo-Pacific as an example. If this administration was not a force that people wanted in the region and think it was important in the region, then the Quad would never have gone back to the official level. And I think that signal alone is a very powerful signal that the United States is not disengaging, that people see the United States as an important partner. And so I do think that they're bringing peace and stability, not taking it away.
Okay, let's.
My name is Shailesh Pathak. I work for Larsen & Toubro, L&T. And we also have a large PPP program where we get $1 million per day of toll. So coming to Sanjeev, who said that this is a trivial part of actually building the stuff. The more important is mental infrastructure. I'm in the trivial part. And Nisha, you said strategic priority to economic reality. Now, I remember 2007 when a lot of American capital had come to Bombay. And Hank Paulson that time was, I think, Treasury Secretary. And he said the wall of money is going to hit India from the United States. So that was 2007. Currently, we're talking about private capital for connectivity in ASEAN. And I thought the Asia-Africa Growth Corridor is a good proxy for that. I mean, L&T has got business in ASEAN and in Africa, and I'm particularly about Africa. And Sanjeev, you mentioned our neighbor is South Africa. How do we see private capital getting really into this connectivity infrastructure? Because Shujoy would agree that private capital hates risk. In fact, private capital loves constructed assets which can be refinanced. So a TOT highway program that's being launched in India is amenable for private capital. Will private capital finance a road from India to Singapore? Perhaps not. So are we really talking about creating infrastructure or refinancing infrastructure is the question.
Sure. Yeah, I mean, cross-border risk, which, across emerging markets, even across developed markets, is always considered to be the riskiest projects from a financing standpoint. Having said that, I've been part of an institution that has done 2-3 of these things quite successfully, and mostly they were in the pipeline sector. And going through extremely tricky cross-border issues, combination of the national governments, of other governments, and of multilaterals. I think the tools are all there. It's really the ability and the willingness and the desire to bring those tools to play to do something complex. And the concern that I have is that I think we are at a point of time where a lot of the wall of money or whatever it is basically after very easy stuff, and there's a bit of a lack of leadership right now, I think, of who's going to actually make these kinds of projects happen. But we've basically dealt with cross-border roads, we've dealt with cross-border pipelines, we've dealt with risks, where you put an airport in a country and airlines from other countries use it as a hub. So when there's a commercial, underlying commercial sort of basis, with the right leadership, I think these projects can happen. But I agree with you that they are very difficult projects to finance privately. perhaps governments have to take a more strategic view of these projects and finance them. But having said that, I mean, the way you can finance these projects is by taking those other projects that the private sector is willing to pick up, selling them, and using the capital to do stuff like this. So I think at the end of the day, it's really public and private capital. Someone taking a look at it and saying, where's private capital the best suited? And if we can raise capital with private investment, how can we use that capital in more, I would say, strategic areas?
My name is KP Nair. I've been a journalist most of my adult life, but I'm not here as a journalist. Increasingly, I do a lot of strategic analysis for various people. My question is for Mr. Sanyal and Mr. Bose. Mr. Sanyal, you referred to the old elite in your initial remarks, and Mr. Bose, you referred to the need among foreign investors for political confidence and political stability. My question is, how much of a handicap are legacy issues in India in what both of you do? I mean, in the past, virtually everyone who has had to deal with India in the old system has had problems, and many of those legacy issues have not been solved. So how much of a problem are these legacy issues in what you do in the new setup in India?
I almost hesitated to ask based on the comment and the response to the last question about we're focused too much on easy projects, but that was precisely my question, is looking at the panel, this is such a vast region. What would be the priority areas of focus? What is the low-hanging fruit? Where are the supply chains? What are the most important supply chain targets that you would be focusing on?
Sorry, just very quickly. I haven't heard a lot of discussion about governance. We worry a lot about the Belt and Road Initiative for many reasons, but one of the main reasons is lack of good governance, or the idea of that. If there's going to be an inflow of private capital, we're going to try to encourage that. If we're taking on new and innovative models that really look like sovereign wealth funds, if we're trying to arrange kind of new multilateral systems or multilateral groupings between countries, there could be a hodgepodge of governance rules at play, which might not be good for private sector confidence, but also just might introduce new elements of risk of project viability and to what end and how people will have confidence in them. So I'd be interested in the panelists' thoughts on governance.
Moving into Indo-Pacific connectivity and attracting private capital, what are some of the governance challenges? And I think we talked about in fact, I think you've talked about and written about the need to kind of factor in the environmental standards and sustainability into infrastructure projects. And then finally, what are some areas where we could try to put some quicker wins on the table, despite the fact that there are larger, more complex, systemic issues that need to be dealt with. So why don't we go across the panel on that?
And since you talked specifically about the old elite as a legacy problem, it is, in the sense that, you still have things like the non-aligned movement is still alive, and one wonders what we are not aligned to. But what is happening is that, there is a distinct change. One is partly generational, partly is a turnover, replacement of the old elite, which basically means that you are, for the first time, have people emerging out who didn't grow up reading Enid Blyton or took BBC or New York Times particularly seriously. So that reorientation also means that our way we see the world is fundamentally changing. That is why I made that point. That decolonization, or whatever you may want to call, is very much important in the way we see our place in the world. So I wanted to make that point, didn't want to trivialize the business of actually building hardware, but you see, why didn't we do it all this while? The reason we didn't, because the way we saw the world was very, very different, and that has fundamentally changed. That is the point I was trying to make. Now, as far as legacy issues is concerned, there are many legacy issues, which, by the way, relate to the governance question. Just within India itself, there are serious issues with enforcement of contracts, for example. We have a judiciary system which is a real legacy problem. In fact, they think so now. We have serious problems with regulatory frameworks and frequent and random changes in them. We have a somewhat unclear trading networks with all kinds of complicated bilateral, multilateral deals of all kinds, which keep changing. So these overall governance issues are certainly things to be concerned about. But at least here in India, we can say that we are now very, very focused on some of these things. Some of the things, for example, like ease of doing business, we have been working on, chipping away at it, and some of it is getting recognized now. Long way to go. Going from 140 to 100 only looks good because we were at 140. 100 is still pathetic. And we need to do, Prime Minister Modi is very clear, we need to be in the top 50 if we are going to consider ourselves a serious player. So at least internally we are serious about some of these things and creating a stable framework for both the private sector, but also a stable outlook on what we as a country want to do with even the public part of that investment. So that is the sort of context in which we are going about it. But I think one good thing, and hopefully many of you can even see it, is that we have really removed many of the cobwebs inside our head which constrained us before. And that's why I keep coming back to the idea of our mental maps. That, if anything, is the single most important thing that has been achieved in the last 2 or 3 years.
So I know we're being asked to wrap up quickly, but what I thought is I'll just go across and give everyone a chance to talk maybe about low-hanging fruit and or governance issues that you think, or other final thoughts, and I'll just...
Oh, very, very quickly. I mean, I think there is a temptation in all of this process to think about a kind of race to the bottom on governance. Lying behind your question, I think, is the supposition that would be a bad idea. That's what I agree with. I mean, I think whatever framework it is that you begin to deliver these projects through, then governance needs to be as high as it was before. But I thought Sanjeev made a kind of useful distinction that we need to keep in mind that what we're talking about here is international projects, mostly sort of connectivity between nations, not just building things within them, which gets to your point, sir, about L&T. And it sort of strikes me that, I mean, it's not quite a low-hanging fruit, but within the nations that we're talking about, you have companies like L&T. We haven't talked about European companies, Japanese companies. In Singapore at the moment, there's a real palpable desire, not really articulated, but that the Japanese should bid for the new railway that is going to go up north out of Singapore, simply because there's a belief that it will have higher standards and it won't break down, it will be better run. And so in a sense, there are assets that you have in the private sector if you can bring it together with a political vision and a sort of state-led framework, which will mean that the private sector doesn't get spooked by the risks that are inherent in these transnational projects. So that is not really a low-hanging fruit, but it sort of strikes me as where you need to move.
So, having invested in the infrastructure sector for many years, can't remember a single low-hanging fruit. Where you're entering into a concession for 25 years with a regulator who's trying to balance a monopoly with the interests of the public, you will always have problems. And I think that's where what Sanjeev was saying, which is, and I mentioned that when investors look at markets, they look for stability, but they also look at reform. So coming back to your thing about legacy issues, I mean, last year Argentina raises a $16.5 billion global bond, and obviously it says that investors are prepared to come back in as they see reform and as they see corrections of some of the historical aspects. And I think in India, in my mind, the insolvency and bankruptcy code from an infrastructure investor who's taking risk, and from the perspective of raising debt for those projects, I think is a huge reform, which itself is going to provide a lot of comfort and provide a lot of clarity to to all the problems we deal with even the easy projects.
Yeah, from the government, U.S. government side, like I said, I don't think there's a larger role for the MCC, but there is, I think, a broader interest in the U.S. government about adopting some of the MCC methodology and thinking about projects going forward. So that's probably something I think we'll see applied in the near future.
Great, and I know you wanted to get a quick word in, so.
Should I? It'll be a quick one. My name is Dharmendra. I head the planning division in the Ministry of External Affairs. There was a comment about Iran and something James responded to, and what Shailesh out there said. I just returned from Zambia a couple of months ago, so I've seen in station what our experience in implementing development projects is and responding to host countries' needs for support. Having said that, what we look at now is going to be more of state-led capital interventions. I think we need to keep that in mind when you talk about infrastructure projects. I'll take Chabahar, where we work very closely with the Iranian government in developing the port adjacent to Bandar Abbas. We are not trying to see what the cost-benefit ratios in matching Bandar Abbas with Chabahar are going to be. And we are getting private capital now to enter Chabahar by preparing an export-free zone where they will utilize Iranian gas to manufacture urea or fertilizer for consumption in India. So it has to be a combination of all these factors in terms of involving state-led capital and inviting private sector participation. But we are doing this, and I think it's going to get more and more intense. For instance, we bypassed Pakistan in getting the air corridor going with Afghanistan. So you will see more creative and innovative methodologies like this. Thank you.
Well, thank you. I think that was a very useful intervention on which to conclude our conversation, because I do think it's going to require us to think about more innovative ways in which the state and the private sector can collaborate. And I think this is one of the areas where the U.S. India Business Council is starting to put its focus and attention, because there is so much interest and potential, and this was a great beginning of that conversation. But as we move forward, we want to be able to continue to engage on how we can bring industry and government together to look at the enormous potential for engaging on infrastructure and connectivity projects across the Indo-Pacific. So thank you very much for joining us today, and I know we're running a little bit behind, but really enjoyed the conversation and look forward to moving it forward.
That was great. Thank you. It was interesting.
My objection is
Hi, Heather. Yeah. Okay, that's who Kara is. No, exactly. I was like, I don't think I see her. Yeah,